Good afternoon, and welcome to the end of week market review for Friday, June 7th, 2013. You're going to see that we're going to be covering off a few things today. First off, we're going to be taking a look at the market news, just trying to get an idea of what's been going on a global scale and how it's been affecting the U.S. markets. We're then going to go ahead and look at some economic reports, one of the most obvious sources for news. After this, we'll be looking at both the S&P 500 and the Toronto Stock Exchange. While we're looking at these charts, we're going to be looking at daily charts as well as weekly charts, both short-term and long-term. We'll then finish things off by looking at the volatility indicator. So as we can see, the markets did end up dipping down into bearish territory this week, although the last few days did end up being a little bit more optimistic. Although we did have some pretty sharp declines, the Dow Jones is up 0.88% from last week's close, with the S&P 500 up 0.78% from last week's close. Taking a look at some of our commodities, you can see that we had some larger movement here, with oil up 4.17% from last week's close. This puts it to $91.61 per barrel. Now looking at silver, we can see that it is actually down 2.66% from last week. This puts it to $21.61 per ounce. Now we've also got gold down. It's not down as dramatic as silver. It's only around 0.79% from last week. This puts it to $1,384 per ounce. And finally, when you look at our US Canadian pair, you can see that it is down 1.68%. This is going to put it at 1.0194 pips. All right, and right now we're looking at the economic reports, and you can see that on June 6th, our jobless reports came in at 346,000. This was in contrast to the 350,000 that they expected. This means that we had about 4,000 fewer jobless reports than expected, and as a result, we were able to see a little bit of a nudge or some optimism in the marketplace. Right now, we're looking at the S&P 500 on the daily chart. You're going to notice that we've definitely had some overhead resistance, which is at around 1645, and some very strong support, which has been put in place for quite a while now. So we've definitely come off of support. Things are looking very good. You can see that the last time we broke and met support here, we were into bearish territory. That is the exact same thing that's happening right now. Although you can see the decline was a little bit larger than it was before, you can see that we're ramping up off of support quite nicely. It is dealing with some overhead resistance right now though, so we're going to expect to see a little bit of struggle on Monday, hopefully before it ends up breaking through that resistance and creating new highs. While looking at the S&P 500 on the weekly chart, you can see that same support level and how far back that goes. Definitely we've seen some declines, but when you put things into perspective, you can see that the weekly chart really isn't looking that bad. You can see that the declines were really just short term, with 2 weeks of declines, with this third week being a recovery. And here we are looking at the S&P 500, still on the weekly chart, but we're going back to about 2002. What this does is really puts things into perspective. You can see just how high we've made it, and how it's very possible that we're going to see ourselves work themselves back up to that same height. It's very possible that we'll see us break beyond 1700. All right, here we're looking at the Toronto Stock Exchange. And you can see that we've got it breaking down below the 200 EMA, which was support around 12,400. Now, because of this decline, we can see that we've broken ourselves down into declining bearish market conditions with a black line down below the blue line. Really, though, it just seems like the TSX is following the S&P 500, but it's late by a couple of days. Here we're looking at the TSX on the weekly chart. You can see that it's just breaking down below support levels. Where or not it's going to find support now and end up following the S&P 500 is really going to depend on a few things. A lot of the news is similar between the TSX and the S&P 500, but there definitely are some distinct differences. This becomes very obvious when you look at the TSX on its weekly chart going back to 2012. You can see that we've definitely had a good run, but things are definitely nowhere near as strong as they have been for the S&P 500. So although we can expect that the TSX is going to recover, we really can't have the same confidence as we would in the S&P 500. Now here we're looking at the volatility indicator. You can see that it is currently at 15.14. So we're definitely down below the 200 EMA compared to last week where we spent most of the time above the 200 EMA. We're not back down to the normal trading range, which happens to be between 12 and 14, but we can see that the volatility is starting to ease off, which is obviously a great sign. If you have any questions, make sure that you either email us or phone us at either our email address and phone number, which is listed on the screen. And in closing, we'd like to remind you that whenever you're trading, you're falling back on your predetermined trading disciplines, never deviating away from the path. Ultimately, though, any trading decisions that you make are your own, so make sure that you're exercising caution. This has been the end of week market review for Friday, June 7th, 2013. Ciao for now.